Central banks meet amid nervous markets as the conflict intensifies in the Middle East. The Federal Reserve starts its two-day meeting this Tuesday, with the Bank of England following on Thursday, as geopolitical risks loom increasingly large in the minds of policymakers. Oil prices spiked again in Asian trading before coming back down. In Japan, the central bank warned of the impact of high uncertainty, adding to existing worries about US trade policy. Laura Cooper is head of macro credit at Nuveen. Laura, concern about this conflict and its impact on oil prices is adding to an already complex picture for central banks, isn't it?
Well, that certainly is the case. Certainly the Fed is already concerned about the potential inflationary impact of what we're seeing come through from tariffs. So the potential that we could see an oil price spike feed into those price pressures will just add another degree of uncertainty into their policy calculus.
No one expects the Federal Reserve to move this week, of course, but what will you be listening out for?
I think we'll be watching for two things. One is around the guidance around the future policy path. At the last meeting in May, the Fed did assess that the risks to both unemployment and inflation are both elevated. So more of that stagflation-like environment. So we'll be watching for whether they continue to have that degree of uncertainty around the outlook. And second, we'll be watching for the updated summary of economic projections, where the Fed will include that so-called dot plot, so the median estimate of where policymakers anticipate the future policy path. Right now, they're anticipating 2 rate cuts, and market consensus is increasingly leaning towards only showing 1 cut by the end of the year. And that's largely reflective of the economic resilience that we're seeing in the hard data, but as well that ongoing policy uncertainty. And it's not clear how the trade impact will feed through into economic data.
What's your forecast, Laura? How cautious are you expecting the Fed to be?
I think the Fed will continue to take a cautious wait and see approach. On the one hand, they are going to, have conviction that the economic data is holding quite resilient, but yet the inflationary uncertainties still are prevailing. So I think at this juncture, they're going to take that cautious stance, waiting to see what the impact could be in terms of economic damage on the overall economy, which we have yet to see at this juncture. So I think they could signal, potentially only 1 cut by the end of the year, but we'll also be watching for what signs they have for next year. Right now, they're currently penciling in 2 cuts. Could that actually increase to 3 cuts as we start to see some of that trade impact potentially being pushed out to next year?
We saw caution from the Bank of Japan this morning, Laura. Policymakers there said the picture has become noticeably more worrying since their last meeting. Will they set the tone for the week, do you think?
I think the Bank of Japan caution potentially does set the tone for the week, and that's because they're continuing to react to the ongoing global uncertainty. And we were surprised by continuing their dovish stance, given the fact that, economic data and inflation is actually showing signs of resilience in Japan that we suspect actually warrants a rate hike by the end of the year, which markets are not yet pricing.
What about the Bank of England, Laura? It has perhaps an even more tricky balancing act than the Fed, as it's dealing with a weaker economy. What are you expecting to hear there on Thursday?
I think the Bank of England does have the hardest task amongst its policymaking peers, and that's reflective of the fact that, to your point, we are seeing the deterioration in economic data. We had an unexpected contraction in April. We're seeing that weakness come through in the labor market, but yet inflation, particularly on the services side, continues to remain quite elevated. So to our mind, they're going to continue to take this cautious and gradual approach. So that suggests to us that they're going to continue to cut at a quarterly pace, which suggests, August is the next potential move from policymakers. I think crucially, we'll be watching the vote split. Anything other than a 7-2 in favor of a cut, I think would be a surprise, or 7-2 in favor of a hold would be a surprise to markets. And I think that's really the crucial indicator for the future policy path coming from the Bank of England.
That was Laura Cooper of Nuveen. Don't forget, you can watch more videos on Reuters.com.